Mira Business FM, the morning drive. My name's Tim Elliott, and real estate now. The UAE market wrapped up last year, 2025. Serious momentum is one way of putting it, I think. Soaring office rents, record residential transactions, and a booming hospitality and logistics sector. That's a reasonable characterization. Our guest will put me straight on that if necessary. But there is a new Q4 market review from CBRE Middle East that shows strong demand across nearly every asset class, driven by population growth, non-oil economic expansion, and sustained investor confidence, even as oil growth moderates. Now, to break down what is driving the market, where the pressure points are, and what 2026 could look like, Matthew Green, Head of Research at CBRE MENA, is here, and it's great to see you.
Thank you for having me.
You're very welcome. The big picture, first of all, as you know, the person behind this report, Matthew, what jumps out, what stands out to you about how the real estate market ended last year?
I think really it's about the level of resilience and strength that we're still seeing. So if you think about when this growth story really started, we're really from kind of midpoint 2020, so the onset of COVID, obviously complete turmoil, I suppose, within kind of global markets, and here, government here made some really kind of strong choices, changed the visa system, opened up early, got the economy going again, and really since then we've been in a growth cycle for the real estate market. Now, different parts of the UAE have different timings, so maybe Abu Dhabi was slightly behind Dubai, Ras Al Khaimah the same, but really for Dubai, I think really from the kind of the midpoint 2020, you started to see an increase in activity, and you started to see prices, particularly for residential, start to increase. So I think the fact that we're 5 years plus into that cycle is exceptional. We've traditionally seen shorter cycles here. I would say 3 to 4 years would be a typical cycle length. So again, that kind of elongation and I said the continued support from international investors or from international companies wanting to come into that market, that's the real standout for me. Now, there'll be different sectors, different locations with slightly different cycles, and some are probably nearer to the end than others, but I think we're going into 2026 with still quite a high degree of positivity for most, if not all, sectors.
That's kind of the perceived wisdom, isn't it? We talk about real estate a lot on this program, and most commentators are pretty bullish. Let's put it that way. That's the overriding kind of opinion. Anecdotally, my kind of litmus test, my test is always traffic. That's still, a good problem to have, I suppose. We've just hit 4 million population in Dubai. So, growth is there. That doesn't look like it's going to dissipate. So am I looking at this in the right way? Is that a reasonable way to assess it?
I think, look, one of the benefits now is that the market has become much more transparent. So we were talking about maybe our first time we met, we're talking around 20 years. I mean, we've been in Dubai a long time.
Yes.
And back in the day, you really didn't have access to the data we have now. Now we have privately listed companies, whether that is related to parking, to SALIC, to DIWA, which gives you anecdotal, I suppose, or certainly kind of data points which we just didn't have. They're all showing strong growth. Now, that comes from population growth. It comes from the kind of economic strength. So we can see there's certainly a kind of a robust demand profile there, and I think that gives us more confidence than maybe we've had in previous cycles where I think markets were much more speculative. And I think really maybe one of the areas to focus on is just that this is a really broad growth story. This is not just one emirate or one sector. We've seen in the past Dubai residential, it drove everything. Now we're seeing really strong office demand, really strong INL, industrial logistics. I mean, this is a cornerstone of any kind of long-term growth for an economy, manufacturing, exports in many cases for Dubai and for the UAE as well. So these are more long-term kind of structural sectors, and all of these are seeing growth. Tourism, again, another good example, really important to the UAE's diversification strategy, and everything is kind of functioning well at the same time. Not to say that, as I said, that certain sectors are not likely to see maybe a softer 12 to 24 months than others. I think Dubai residential, I think you can see parts of the market cooling slightly. We're still seeing growth, but we're coming off the highs that we've seen. You've seen rental rates, as an example, obviously soften in certain locations, and pricing continues to grow, but at a lower rate. So it will become, I think, increasingly fragmented over the next 12, 24 months.
It's interesting as well that it's spread across the Emirates, and we have the Emirates is a federation. It's a united federation, but with different ways of building and thinking, different styles. So you have Dubai, then it's Abu Dhabi, it's Ras Al Khaimah, it's spread into Sharjah. It's certainly a broader spread now, isn't it?
Yeah, no, for sure. I still believe, though, that the main markets of Dubai, and to, I'd say, a lesser degree, Abu Dhabi, still have an impact on what happens elsewhere in the country.
Sure.
If you're an investor sitting overseas and you can see, obviously, a price differential between markets, that is a potential value opportunity. But if that kind of arbitrage between the two were to shift too far in one direction, again, I think you would start to see maybe more activity come back into Dubai, which I think arguably has best quality kind of infrastructure. Those sitting in Abu Dhabi will have a different view. They've got the best cultural offerings, the best beach. So it has kind of evolved into a market which I think you can maybe target certain kind of USPs, and you can understand, okay, it's the world's safest city. There's many kind of other kind of attributes, I suppose, which drive investment decision. But I think fundamentally, in a lot of cases, particularly for Abu Dhabi, it was probably about value and just a perception that it was undersupplied compared to Dubai. 1 hour away, fantastic infrastructure as well. So I think that's been a key driving force for there.
Let's talk about office rents. Dubai office rents up 18% year on year. How sustainable is that growth going into 2026? We're obviously a month and a bit in. And then, Dubai and Abu Dhabi, rents jumped sharply. Occupancy's near record highs.
Yeah.
And so the second part of the question is supply problem, demand story, or both?
So offices, as I said, is a really good indication of the strength of the economy. We've seen a real sea shift, I would say. Not, let's say, international companies didn't want to be here before, but after COVID, we've seen just a real change in the mindset of global capital, particularly. So if you look at ADGM and DFC as just being two fantastic examples of this, yeah. Hedge funds, investment banks, alternative finance companies. Both of these free zones are running at close to capacity. So, in Abu Dhabi, the ADGM Square component of that is full. There's still space within Reem Island, but if you look at what the global corporates want from an office space, it's not typical Reem Island product. It's the Maya Island product that they want.
Right. Yeah.
For DFC, quality of the space overall across the master plan is, I suppose, maybe more better quality, I suppose, within that market. So, but I think certainly the kind of the rationale for being in these markets has kind of changed. We've seen massive expansion from some of the hedge funds that have come in. So they've changed. They came after COVID, maybe individually or as a company. They saw how the market was. It opened up when many markets were closed. People who didn't have companies started companies, people who had it expanded it, and that really has just snowballed. But I think probably one of the kind of the biggest factors in this whole equation is actually the residential market. So the residential market has been so strong that developers looking at this market have really put all their eggs in one basket. And what's happened because of that is just a massive lack of commercial supply. So you went from a situation in 2019 where Business Bay, JLT had massive vacancy rates, like pretty significant. We fast forward 6 years, and we're looking at overall occupancy rates in Dubai of around about 95%. So everything has caught a bit of a break over that period, and that's gone. So all the good space filled up, and then you kind of saw that kind of tier out into kind of secondary and tertiary locations. You also saw a return to investment activity in offices. So we've seen a lot of strata offices developed and launched during that period. But really, it's just the market was maybe a little bit caught by surprise. the supply hasn't been there, the demand button was massively pushed, and then you've just had that kind of runway where everything is getting taken up. Rental rates have skyrocketed even for lower quality buildings, and now you have a bit of a weird situation in offices where you have institutional landlords, like many that are there in DFC, who have set up a rent profile. They're long-term investors, they're long-term landlords. They want to keep their tenants. They want to keep their corporate tenants happy. So they're probably not as aggressive. On the other side, you have a lot of individual owners within strata buildings or within maybe other secondary locations, particularly around Business Bay, who are much more short-term in terms of the outlook.
Yeah.
So they've and in some cases, are matching even the prime rents that you're achieving in DFC, just because there's that much of a shortage. So as an occupier, it's very difficult at the moment, particularly, I think, particularly outside of the free zone, actually, because again, your TCOMs and your DFCs and stuff tend to be a little bit more, I said, long-term in their thinking and less aggressive in their rental uplifts on renewal. So they have some protection.
See, I take probably a much more simplified approach. I mean, my characterization is just gangbusters.
Yeah.
At the moment, and it really is. It's kind of a pithy way of putting it, but there's a lot of truth in that. But it's a good problem to have, isn't it?
Yeah, no, for sure, it's a good problem to have. I mean, for a period. Now, obviously,
Sure.
we don't want to get to the point where, I mean, again, I remember back in 2007 and 2008, and that kind of period. Again, we had a real undersupply of offices then, and it kind of got a little bit ridiculous back then as well in terms of where rents went for very low quality product. And we're nearing that at the moment. But the rationale for this happening is because the economy has been really strong. The non-oil economy has been particularly strong.
Yeah.
So that obviously is a kind of real positive. The fact that we have so much demand for these international companies to be in Dubai, and honestly, on a pretty much daily basis at CBRE, we are receiving new investors who want to come into the market to allocate capital, who want to come in to set up a fund, find a local kind of partner with land and develop to find offices. And again, it can be a challenge, one, to obviously to find suitable accommodation or to find the willing investors to trade their assets. But as the weight of demand is there, and this is sovereign wealth funds, global institutional capital, capital, private developers. It's a real kind of mix of quality that we haven't seen again in that kind of whole period. 20 years ago, people, I think, maybe treated the Dubai and maybe the UAE. Okay, we need to have an office. We've got, Adia and Mubadala. There's a lot of, obviously, wealth within the region, these sovereign wealth funds. We need to have an office there. But it wasn't really a proper kind of function office. Now you're seeing people moving their headquarters here, obviously to Riyadh as well, and they are investing in people. They're bringing global talent. They are setting up operations which sometimes are their biggest offices globally. And this is, again, big, large financial institutions, hedge funds, etc., which are really kind of committing to kind of their growth, long-term growth within the region. And that is testament, really.
It is. We were talking to a quant fund this morning, Primrose, who've just set up in Abu Dhabi, who said exactly that. It is testament. Let's look at the residential market a little bit. Prices, transactions hitting new highs, particularly off-plan. The off-plan story continues, of course. So is that healthy expansion? Are we in danger of a little bit of overheating? Are there early signs of that, do you think?
I have, I suppose, kind of two views in this. One is the kind of the Scottish, slightly more kind of pessimistic kind of one, which kind of says if it's off-plan, it's more speculative. And again, I've been here through multiple cycles. I remember the 2006, 7, and 8 when you had, 5% down payment, you could own a home, and
That's right.
the banks were highly leveraged, and there was a lot more risk in the system. Now you have, I suppose, obviously off-plan allows investors to get in, but you still need equity. You still need to be able to deploy that capital against that structure. So I think there is less risk in that system than there was in previous cycles. So that's one part.
Okay.
The other part is well, we have a massive amount of foreign investor demand who want to put their money here, more than there's ever been. So you have to take that as a positive. Now, again, are all these off-plan investors going to come and live in their home? No, they're not. But one of the big differences, again, from previous cycles, is that a lot of people who've invested over 2 million dirhams quite like their golden visa. You need to keep your property to obviously to have that because it's related to the asset. So the fundamentals and the kind of the structure of the market is really different. On top of that, people are moving here because Europe, US, other markets have growing issues. I mean, some people are concerned obviously around safety. A lot of people with money are concerned around taxation. The UK, obviously, government and various other governments aren't exactly rolling out the red carpet for people with money. So people are leaving. People with businesses are leaving. People with assets are leaving, and they're spreading the risk. And Dubai has been a massive beneficiary of that. No tax, no income tax. We say no tax. We know we have SALAC and other kind of soft taxes, 5% housing tax, 4% registration fees, but we do not have income tax. You mean our VAT rate, etc., is low. Corporate taxes again low. So that kind of environment is really attractive for people with money, whether that's a business with money, where it's an investor with money, etc. Dubai, and talk about Dubai a lot. A lot of this applies to the UAE because we've got some kind of federal laws which obviously include obviously things like kind of the golden visas, but the other visas as well have all also been attractive as well, remote visas. So all of this, I think, has kind of created an environment which is just far more conducive to keeping people longer term. Before we even got on to things like potential for long-term retirement visas, et cetera, et cetera.
Yeah. But it's also the point that now, if you are fed up in Europe, you have somewhere to go. There is a path now.
Yep.
It's as simple as that, isn't it? Abu Dhabi's residential market, I wanted to ask you about. We have talked about Dubai a lot, and so much emanates from Dubai. But extraordinary growth in prices and volumes. And I'm wondering what's different. What's structurally different about the capital at the moment?
I think, again, I'm a former Aldar employee, so I have I think a good kind of experience of what has changed in that market over that kind of period. So we've seen obviously the same structural changes, so availability of visas. We've seen rapid digitalization of process as well, and we've seen developers, particularly, as I said, the likes of Aldar, create international sales channels that allows them to get out to a much bigger market. So that's a couple of things on the internal side. Externally, Abu Dhabi's safest city in the world, home to sovereign wealth funds, home to ADGM. So people have realized, one, that the market was undervalued, that from an infrastructure perspective, it was fantastic, great airport, amazing cultural offerings. We see that with Saadiyat now, and obviously the projects which are being developed around there. I keep being told that I need to go down to the Natural History Museum, which everyone says is fantastic. So
I keep reading the same, yeah.
So these kind of opponents are again, they're good for demand, but what you've seen is just a massive shift. I think say 6 years ago, most, if not pretty much all of the investors in Abu Dhabi would have been Emiratis plus resident expats. Now you've seen that kind of demand picture really kind of turn on its head, at least for some developers. And now it's majority international investors and resident expats, and less Emiratis. And it's not because Emiratis are spending less; they're actually spending more. But there's such a weight of other kind of foreign investors has come in, but it's diluted their market share. So that is, I think, has been fundamental. But just you've seen a lot of much higher quality real estate developed as well, and from an economics perspective as well, we also have solid demand. Too many previous cycles in Abu Dhabi were perceived really just to be oil cycles. Oil markets do well, government spend money, and people obviously then, I suppose, obviously invest that kind of money back in. So again, it was a very localized kind of market.
It was so straightforward in the old days.
It was simpler times.
Yeah, simpler
But
times.
now, now again, we're seeing the government's diversification strategy, particularly in Abu Dhabi, bear fruit. So lots of investments into manufacturing, industrial, again, into the financial free zone, but just, across the market, a lot of legal professional firms coming in, a lot of finance firms coming in, again, and these people are bringing money, and then they're investing into the market as well. So it's really been a real kind of snowball effect for Abu Dhabi.
Do you know, very often we get stories of reports coming in, and very often I think, oh, it's another report. Oh, here we go. But this is not the case with you. There is so much to talk about. Unfortunately, we don't have any more time to get into it. But I really appreciate you coming in. Is my characterization of gangbusters a little bit too oversimplified, or is it reasonable?
No, I think it's reasonable, again, for certain sectors. I think commercial offices across kind of all markets has more to run. That's just a supply issue.
Yeah.
For a residential market, at least in the case of Dubai, has a really big pipeline. So you will start to see more kind of shifts in that market probably than any other sector.
Okay, that's kind of what I was looking to hear in a weird kind of a way, because that's what we're starting to read. We've got to get you back in, talk to you again.
We'd love to come back.
I really appreciate it. Matthew Green is Head of Research, CBRE MENA. See you soon. Thank you.
Thank you.
Appreciate it. Mirror Business FM, it's the morning drive. Get in touch. Tell us what you think across social media. Like and subscribe. You can find us on YouTube, wherever you get your podcasts as well. Just look for Mirror Business FM. And a reminder that Crossroads is a new show just started here on the station. A collaboration with Middlesex University. Dr. David Tully, Dima Magalse, #1 on the Apple Podcast chart this week. It was as well. It's all about the business of media, entertainment, and much more. Fridays, 1 to 2, and where you get your podcasts. Mirror Business FM.